Hey, Rohan. Super excited to have you on the podcast. Thank you so much for giving us your time.
Of course, Abhay. Nice to meet you as well. Thanks for having me.
So, Rohan, please introduce yourself to our audience.
Yeah, I guess to be quite frank, I'm just a regular guy. I'm a 24-year-old Gen Z living in America who started to make some money. I work at Bain & Company as a strategy consultant, and I thought, okay, now that I'm starting to get some income, what to do with that money, right? And I looked at all of the different asset classes, a bunch of different stocks, and over time, I'd come to the conclusion that Bitcoin is the best place to store my value, and I'm happy to go into why, but that's kind of a little bit about me.
Great. And what's your Bitcoin story and how did you come about making that Bitcoin video? Please share that journey with us.
Yeah, so I guess I have a very similar story to a lot of people where we first hear about Bitcoin years ago. We're a skeptic. We think it's a scam, a Ponzi scheme. It's bad for the environment, and it has no intrinsic value, whatever that means. And so I remember I was sitting in a classroom in high school and a friend of mine had bought $5 of Bitcoin and we were watching it go up from 5 to 6. Oh my God, from 5 to 4.5. And we're like, this thing is so crazy. But I had no idea what it was. And so I just passed it on, whatever. Years later, I discovered it again because it's the kind of thing that keeps on popping back and up and up and up, right? Whenever you want to stop talking about it, you hear it on the news again, right? So I was like, okay, there's a lot of smart people out there that are giving this thing credibility. I'm sure they're not all just like complete idiots. There has to be some merit to it. And so I started to look into it. And naturally, I read the white paper at first, right? And it was a little too technical for me. And so I'm like, okay, I still don't get this. This is for cryptography nerds and people who want to just get rich quick. And I don't have time for this, basically. And so I put it away again. Then I picked it back up early 2023. And I'm like, okay, you know what? This time I'm actually going to try to understand what this is. And I looked at it from beyond just the peer-to-peer payments side of it. And I got a lot more fascinated by the store of value component to it, right? And I started to do research on the history of money and understand how we got to where we are. And that's when it started to click. I started to understand what is money and just asking that question, right? What started off as bartering, that led to problems because we needed a common unit of exchange. And so people used seashells and rice stones and then silver, gold, and then fiat. And I tried to see what's the evolution of how we got here and why would people think that Bitcoin's the next evolution? And it just made sense. And so the reason I made this video that you're probably referencing that I tweeted was because my issue with Bitcoin education is that when you go on Google and you search up what is Bitcoin, right? The first thing that pops up, Investopedia or these other websites, they just start talking about all the technicals and the details of how it works. They talk about the origin of it, that it was founded by Satoshi in 2008, and that it's a peer-to-peer payments, and there's a blockchain and mining and hashing and all these things that will really mean nothing to a beginner like me when I first got into it, right? So I was like, I'll approach this from a different perspective to share a little bit about the history of money to show how we got here and if that tells us a tale of where we could be going next, because I hadn't seen much like that. It was inspired by the Bitcoin Standard book that I had read by Safadine, which was really helpful in understanding why Bitcoin has value. And so that was kind of the inspiration.
And talk a little bit about your El Salvador journey. I know you went to there. Why did you go there? What came to your mind and what was the experience like?
Yeah. So first in 2024, I went to the Bitcoin Nashville conference. And that was incredible for the purpose of getting to meet a lot of people in the ecosystem. And so I thought I want to go to more conferences like this. And I thought, where better to go than one of the primary Bitcoin countries of the world, El Salvador, right? So they had the Plan B 2025 conference earlier this year that I went to. And I got to meet a lot of people, hear a lot of great speakers. But almost even cooler than that, I went to El Zonte in El Salvador, which is also called Bitcoin Beach. And I got to see what it's like for a circular economy to actually run on Bitcoin. All of the local merchants at the beach all accepted Bitcoin, transacted in Bitcoin. And it just was such a happy, euphoric ecosystem. Everyone was at peace. There was no one trying to be overly salesy, trying to sell me things because everyone was very comfortable with the money that they were getting and understanding that it's been appreciating over time and will continue to appreciate. And so it left people with a more peace of mind, which I thought was just fascinating to see and witness. And so I recommend anyone who's interested in Bitcoin to eventually take a trip out there. It's cool what they've done. Like El Salvador used to be a very objectively more dangerous place with gangs and stuff that they had there. And President Bukele kind of got rid of all of that, and it felt very safe walking around. And so it's an incredible country, and I love what they're doing over there.
Super. So I'm searching what is Bitcoin, and I'm seeing all of this in Google. I'm a new Gen Z, a curious person like you, and I leave it in between. What would you rather tell that person if they have not yet discovered your video? So help us take us through that journey of what would be a frame which you think would resonate, which you've captured in your video as well.
So the first thing I'll say, which I didn't bring up in my video, is that if we're speaking to Gen Z, Bitcoin and crypto are two different concepts. All of my friends and people in my generation like to group them all together. Oh, crypto this, crypto that, right? And I think because of some of the issues that have happened in the crypto ecosystem, they loop in Bitcoin into that same category, which is entirely different. Bitcoin is the only crypto that's like an asset without an issuer. There is no foundation or CEO or company or person running it. It was a gift to the world by an anonymous creator, Satoshi Nakamoto, who put this into the ether and then disappeared forever, right? So it's inherently different. Now, getting into why specifically Bitcoin, if we're walking through that video, basically, if we go back in time and look at different systems that we've used for currencies, right? First, before we had currencies, we had to barter, right? And if I had 3 cows and you had a plot of land and I want a little bit of your plot of land, am I going to give you 2 of my cows for that quarter plot? It just became very difficult when the world got more specialized, right? So we needed a common unit of exchange. And so then there's been many different units of exchange that I've used throughout time. And we've always tried to find the most neutral, scarce asset that people value, right? So there were times like in Africa where they used to use seashells and sea cowries. And basically these were rare. These were hard to produce. They would find them on the shores. And then when European settlers came to Africa, they saw this and they thought, and they began importing shells in mass quantities from other parts of the world. So it no longer became scarce. And what happens? The currency collapses, right? A very interesting example is in an island of Micronesia called Yap Island. And what they used as currency, as money, were these things called rye stones. They were these big, heavy discs. And the reason these were valuable is because the people on the island had to take their strongest men, their biggest ships. They had to go travel 250 miles east to the neighboring island of Palau. They'd had to acquire these stones, put it back on their ship, and come all the way back to the original island. Along the way, they lost tons of their men who died. They lost rye stones that fell off the boats. It was a very difficult process. And so because of that, they were rare to actually find on the island. And so this worked great for a long period of time. Because the money was rare, it was harder to produce more of. And so it stood the time, right? Of course, one day then, there was an American-Irish sailor named David O'Keefe who saw this. And so he came to the island shipwrecked and he thought, I have an idea. And so he goes to Hong Kong, basically gets this big ship from there. He takes his men, his advanced tools, advanced technology, faster ships. They go out east to the island of Palau pretty quickly and easily compared to when the people on the Yap Island were able to do it. And he quarried and got these rye stones very quickly. Supposedly they used some TNT as well to blow parts of it up, speed up the process. They came back, and since it was so easy for them, they could do this over and over, and they collapsed the currency supply of the island because it was no longer rare or no longer scarce. So the rye stones were rare in their own bubble until it became very easy for that to now get inflated. So in both of these two scenarios, the seashells and the rye stones, what started as a really strong form of money that stood over time of having value, lost its value because it was very easy to get more of, right? So naturally, the world realized this and they thought, okay, it seems like gold is the next best option. And that worked for thousands of years. Gold was rare to find. It took a lot of energy to mine it. It's all over the world. It's global. It's shiny. And people gave it value. The problem with gold, though, over time is a few things started to happen. Number one, it became very difficult if you were trying to transport that gold from like China to Europe or wherever. And so what had to happen was banks started to get formed, right? Where banks would basically issue out a paper receipt saying, hey, you put your gold in our reserves, and in exchange, we'll give you a paper receipt that says you own this much gold. And what started to happen over time is that banks started to issue out more paper receipts than they actually had in gold deposits. And so since gold became very centralized, you couldn't really track it well or prevent that from becoming an issue. And so then there was many issues with that over time. And so eventually Satoshi Nakamoto had seen this problem, as with many others who tried to come up with innovative solutions. And I guess before this, though, there was the natural evolution is that each country started to issue out their own currency, right? That was backed by gold. So this worked out great because gold is scarce. And so you couldn't print more of your currency than there was gold in your reserves. Of course, same thing happened that I'd mentioned that those smaller banks started to do. America ended up getting a lot of the gold, and America started to print a little bit more dollars than they actually had in gold reserves. And so France saw this. They came on a ship to America and said, hey, we want our gold back. It seems like you guys are the reserve dollar or the reserve currency of the world and are printing out more currency than you have in gold. This is not good. And so in 1971, President Nixon took us off the gold standard. And so since 1971, it was supposed to be a temporary thing of us getting off, but it's been basically permanent. So since 1971, we've been able to print as many dollars as we want. And people don't see the consequences on the front, right? But think back to the rhinestones or the seashells. What happens when you can print more than you actually have of a scarce commodity or resource backing that? The currency starts to inflate very rapidly and starts to collapse. And we are starting to see that in slow motion here. And so that's when Satoshi Nakamoto saw this and thought, what if there was a way to make something like gold that fixes all the flaws of gold, right? Is infinitely divisible into a million pieces, is portable, is truly fixed in supply, is global, geopolitically neutral, and all of those important properties of money are now what Bitcoin has created in its ledger. And so that's kind of what I saw. And I thought, wow, this is pretty phenomenal. And I think it's only going to grow from here.
That's amazing, and so excited that you had the curiosity and the humility to go through that journey and then look at it and challenge it from first principles. You also mentioned that in El Salvador and at El Zanto, when you saw the Bitcoin circular economy, you saw a behavior which was different than a behavior you've seen elsewhere, where most people in a tourist place would want to push for their products and services. Did you mean that it was because they are on closer to the Bitcoin standard versus the fiat? So do you think fix the money, fix the world kind of thing there? And any thoughts on what change did you see, and what do you think is the root cause of that joy and the happiness that people feel when they deal in Bitcoin only?
Yeah, it's quite magical, actually. I think when people are being paid in fiat, there's this understanding. It's becoming more known that people's currency is being deflated. Prices are going up, right? People are feeling that pain. And so you have to go and put your fiat to invest in different kinds of assets, right? Whether that be real estate or stocks or bonds or gold or fine arts and collectibles like Mona Lisas, but only the rich do that anyways. But like, I saw the panic here, even in America, like during all of these tariff wars, everyone's like, oh my God, my Nike stock, I never saw this coming, right? Like on a Bitcoin standard, there's no counterparty risk. And what that means is there's nothing there's no competitor, there's no government that'll say something, there's just nothing you really have to worry about as much. If there's a tariff or a global war, it in fact only helps Bitcoin in the long term. Global chaos is a fuel for Bitcoin. And yeah, so like in El Salvador and El Zante, there was this peace of mind of just like they started on this Bitcoin standard years ago. And so they've seen that money grow. And so there's a behavior change in the sense of not everything is about how can I get more money? How can I get more money? Because people are more comfortable that their savings account is going to appreciate over time. And I think that's a common thing with a lot of Bitcoiners too. We see the world in chaos and it gives us some peace that, hey, you know what? Things are going to be okay for us. And that's why it's like important to spread this, because we want the people around us to be okay, our friends and family. And so when we talk about Bitcoin, it's not to be like, oh, like here's a quick money making opportunity. It's like if you adopt this standard, it truly gives you peace of mind and just makes life a little bit better, in my opinion.
Great thought. Have you seen any change in the way you treat your time and your resources and your money, and where you devote time to after getting down the Bitcoin rabbit hole versus your friends or versus your own self 4 years ago when you were just a aspiring young person trying to make it big in life?
Yeah, that's a great question. I guess firstly, I had mentioned that I started to like question what is money, right, in the early days. And so I started to do a lot of research on this because I thought it was just, oh, it's just currency. It's just what someone else tells us is money. It's just what we use to exchange exchange for different kinds of goods and services, right? But when I really started to get deeper into it, I think the latest conclusion I have, the best version that I can think of, is that money is just time and energy in an abstracted form at its core, right? The realization I had is that like I go to work at my strategy consulting role, and in exchange, every 2 weeks, I get paid for that time and energy that I contributed in dollars, right? And so I realized like, okay, if they can start printing money without any extra work, that's not just devaluing the currency, that's devaluing the time and energy that I've contributed to society. And that was the big mindset shift that I had. And it's not just like printing a little bit. Like since 2020, during the pandemic, our country had printed 40% of the supply to ever be in existence of dollars. Like 40% in just a few years. Like that's a big deal. That's a very big deal. And so I thought, how can I protect that time and energy that if I'm putting in all this work, I should at least be able to maintain that, if not make it like increase higher, right? And so Bitcoin just seemed like the perfect way to protect that time and energy, because it takes time and energy to produce more Bitcoin, right? All the people who say like Bitcoin's bad for the environment, there's a few different thoughts against that. Like number one, that's part of the whole idea. It's supposed to take energy to produce it. And in terms of like being bad for the environment, Bitcoin is an incentive system where if your cost to produce the electricity is very high, it's not going to be profitable for you to mine it, right? And so over time, the places that have really cheap electricity costs, especially in renewable energy source places where there's excess energy, that's going to be used to mine Bitcoin more and more. And so overall, the incentive system is set in place. But in terms of now how I think about money, like I try to stack sats, as they say, whenever I can. And I'm more cognizant about how I like spend my money, because I know that if I stack Bitcoin, that same money could be worth a lot more in the future. So I'm a lot more conscious about my spending habits than I used to be, which I think is another big change.
Great. So, Rohan, with your journey and experience, let's say I am a young professional like you, and I haven't had the opportunity or the experience of exploring Bitcoin. And I believe in traditional other investment tools which are available, maybe stocks, maybe bonds, maybe real estate. And I am economically well off. I work for a great tech company or a financial institution or something. And why should I care about Bitcoin? And is there a reason why I should care about Bitcoin? Is there a reason why I should start buying Bitcoin, or is it okay for me to not care about Bitcoin?
I think that's a great question. So I was in that exact same boat, right? I work at like one of the quote unquote like big strategy consulting firms. And so no one around me talks about Bitcoin at all or really ever gives it the time of day. Number one, because people are so busy with their own kind of day-to-day lives and we work such busy jobs that it's like, it takes a lot of time and work to really understand what the heck this thing is. It's one of my favorite quotes is Bitcoin is everything that you don't understand about money combined with everything you don't understand about computers, right? And so it does take up a lot of timeshare. And you want to invest in things that you understand what they are. Otherwise, you're not going to have peace of mind. And what's going to happen as soon as it starts to drop, you're going to immediately panic sell because you don't know what it is, right? Bitcoin is a big concern that people have is that it's volatile, right? It can have 50, 60, 70% drops, and it has had several of those over the years. And so if you don't know what it is, you'll panic sell. And that's where a lot of people have gotten scared of Bitcoin, right? But if you look at Bitcoin, it's done something that very few other assets or stocks at all have done, only an elite tier, which is every time it has dropped that much, it comes back stronger, drops again, comes back even stronger. And so the only things that have done that are like Microsoft, Berkshire Hathaway, Meta. So it fits into that tier of resilience. You know, people compare it to the tulip bubble that crashed in the 1600s in Amsterdam. But like once that tulip bubble crashed, that's it. It never came back. Bitcoin, every time it's crashed, it's come up stronger and stronger than before. That's what gave me a little bit more interest in it too. I'm like, all right, this thing just won't seem to die. Every time CNBC says, okay, Bitcoin is dead, it just comes back like way stronger than before. So why is this thing so resilient, right? And now why you should care about Bitcoin if you care about your future, right? Like I want to get married. I want to have kids. I want to be able to put my kids through college. And I'm seeing how fast the money is just getting destroyed. And I have to figure out where to allocate capital. People who are well off and work good jobs, they get paid a lot of dollars or rupees, right? Now, what do you do with that? If you just hold it in dollars, a lot of the people who work at these companies know that that's not the best way to protect your time and energy that you're contributing to your employer. And so people will put it into different stocks, into bonds. Bonds will pay you like a few percent a year, but the rate of which the money supply is increasing is like 8 to 12% a year. So even though it looks like on paper you're making 3-4%, you're actually losing 5%, right? In terms of real M2 money supply. So bonds will give you only like a little bit. And so because of that, people want to invest in the stock market, right? Now, if you go for just the market, overall index funds, that's great. It's safe. And I'm not saying to put all your money in Bitcoin. It's a slow journey. Over time, people, the more educated they are, the more they allocate, but because you want to know what you're holding. But even just 1-2% to start off, 3% of your portfolio into Bitcoin, because it's a kind of a hedge against this money printing. The thing with stocks is that you have to then follow the earnings. You have to follow the marketing team's decisions. Anything can happen, right? So many companies that are in like the S&P 500 or Fortune 500, there's not many of them that have stayed there for over 50 years. It keeps on switching out. So companies that look like they're going to stay there forever very rarely stay there forever. And so if you're investing 30, 40 years into the future and don't want to have to think about what if this CEO gets cancer and has to step down tomorrow, or what if something happens to Elon Musk, you don't have to worry about any of that counterparty risk when it comes to Bitcoin. And that peace of mind is that it's just a network. It's a protocol. It's a piece of technology that you're investing into that provides the world with a very solid monetary system. That's what you're investing in. And so I think at the very least, it's worth studying or not just kind of hiding away from it.
Great. So in short, can you share what is your advice? So I have seen some of it. I have read about Bitcoin and crypto. But what would be your one actionable advice which I should take today, and that will make me and my future generation economically much happier?
Great question. I think firstly is change your mindset that Bitcoin and crypto are two different things, because they're still lumped into the same category, which they're absolutely not, right? The next question people ask is, after hearing about Bitcoin, they say, Okay, what about Ethereum? What about Solana? What about Trump coin, right? Well, what about those? I don't know. Maybe they'll go up a lot. Maybe they'll go down, but I can't say with certainty because of the properties and principles like they have. So I'm not saying that other things are maybe not going to outperform Bitcoin. I don't know. But if you want something solid, I think the first thing to do is study what is money. What is the history of money? Go down that rabbit hole first, and then start to learn about Bretton Woods and what happened in 1971. And you'll start to see that like the world didn't always used to be this way. You know, we all grew up in a time where this is all we know, fiat currency, where government fiat basically means floating currency. So it's when the currency or the money is not backed by any kind of scarce commodity or resource. And so this is so normalized to us because it's been the case since late 1970s, early 1970s, right? But this is not how the world's always been. And so people just assume that because we've just grown up like this is how things have always been. But that's not true. Over the next few decades, things can change very quickly. So study the history of money and form the mindset that Bitcoin and crypto are two different things. Even though Bitcoin is technically a cryptocurrency, it functions very differently because there is no foundation that's running it. It's the most decentralized.
Okay. And we are three friends, let's say person A, B, and C. Person A ignores your advice and says lives their happy life, buys a new apartment as their economic resources go up. They continue to invest in their stocks and bonds portfolio and their investments as traditionally advised by a banker or other investment advisors, and continue to live a very good life. Person B says, hey, I don't spend so much time and I'll allocate 1% just because I trust Rohan. So I don't know much about it. I'll allocate 1%. And person C really goes down the rabbit hole and then allocates 50% or 20% of their 20 to 50% of their economic surplus into Bitcoin. Now, imagine we are in 2040 or 2035, 15 years out, and all of these people have young families and kids. What do you project person A's economic well-being would be? Person A, B, and C, where would they be, and why do you think so?
See, here's the thing. Here's the nuance I would add to that. If we were three friends and the third friend C doesn't really know much about Bitcoin, but they trust me, right? And so they're like, okay, Rohan's smart. I will just put 20% of my wealth into Bitcoin. I wouldn't even recommend that because what's going to happen is by the time we get to 2040, there would have been several different drop downs and they would have sold their stack. That's almost guaranteed to happen because if you don't know what it is, it's very scary to go through those downturns and you're not going to have the peace of mind, right? I'd mentioned that people who live on a Bitcoin standard have more peace of mind. Those are only people that know what they're investing in. If you just buy it because it's a number go up and it just seems like investing in a meme coin where it just seems like so great, like you're not going to have that stack by 2040. So the first thing to do is whoever studies it the most and understands what it is and why it's so revolutionary compared to any other asset that we've seen before, they are going to do the best, right? One thing that really also sparked it for me was that if you look at all the asset classes, naturally, when you're investing in something, you want the price to go up, right? And how is price determined? Supply and demand. And so if you look at the other asset classes, as price goes up and there's more demand, they will create more supply of it. If real estate prices start to go up, they will build more houses or build taller buildings, right? If there's more demand for dollars, they can print more dollars. If there's more demand for a stock, they can issue more shares, right? If there's more demand for gold, they can start to, if gold price triples tomorrow, I'm going to go take out a pickaxe and go start finding gold myself, right? There's going to be a much more higher supply of miners. The thing about Bitcoin is if there is more demand for Bitcoin, that is too bad. That is too bad. There's 21 million that'll forever be the case, and they come out at a fixed issuance schedule over time, and there's nothing that can be done about that. And that is such a revolutionary concept where supply is fixed. And so if demand increases, the only thing that would have to budge, Econ 101, is that price would have to go up. And so that's revolutionary. And so, yeah, I mean, to answer your question, whoever has more Bitcoin on the long run will probably do better. If they're not some financial analyst that is spending every hour of their day looking into stocks and studying every single component of the market, right? Like the regular person doesn't have time to do all that. And a lot of that comes down to luck. With Bitcoin, you don't have to like really think about all of that if you know what you're buying.
Yeah, as Saf puts it, saying most of us have to earn our money twice. One is at our job, and the second time again is by investing it because you want to protect its purchasing power. And if you just put it in Bitcoin, you just have to earn it once. And if you earn it once in your profession or job, then naturally, because of the time you're devoting, you will outperform, which means your purchasing power or income stream would likely increase. And as your income increases, you just need to allocate it to Bitcoin and let Bitcoin do the rest of the magic.
Absolutely. I know he talks about that, and he's like, these days, everyone is part-time plumber, part-time financial analyst, right? Part-time doctor, part-time macroeconomic expert on the Japanese yen and like the carry trade, right? Like we now all have to follow all these macroeconomic trends. What's the Fed going to do? What's this company's roadmap? What's their earnings call? It's just, you can't just save your money in dollars or you're going to not be able to keep that for a long time, your wealth. And so then people are forced to become these deep technical financial analysts, which does two things. Now they're becoming worse at their job because they have to spend a lot of their time not focused on their job, focused on the financial markets. And they're not perfect financial analysts because they have a job to do, right? And so if you just operate on a Bitcoin standard where you don't have to think about all of that, then you can do better at your job. You can spend more time with your family. You can do more things that you want to be doing rather than just figuring out how can I make more money.
Yeah. All of this makes sense, Rohan, because you got in Bitcoin early, maybe at 30,000, maybe earlier. And for some of the folks who got in at $100 or $500 or $1,000, they can all preach and talk about it's 100K. It's too late for me, Rohan. What do you think about that?
That's a great question. I will say every time someone buys, it always feels expensive, right? I bought some this morning. It feels expensive. And I'll look back in a few years and be like, oh, if only I had bought more back then, right? That 100,000 was so cheap when it gets to several 100,000 or millions per coin, right? So you have to have a long-term time horizon with this, not money that you expect to be able to have to use within the next month or 2 months or 3 months or even year. Like I try to have a 4 to 6 year time horizon at least. Like the money I invest today, I don't really want to touch until 4 to 6 years from now. And so when I put it like that, do I think Bitcoin will be in a much higher place in 4 years? I do. I definitely do. And so hindsight's always 2020, right? The good thing is every day that Bitcoin stays alive and continues to operate, that makes it less and less risky. And so the higher price that you buy in at, the less risk you're taking. The people who bought in at $1,000 a coin or $500 a coin, they were taking on a much bigger risk because it was unproven. There was no regulatory clarity around it. People were going to jail. It was just very uncertain. Now, all the pieces are in place. Like one of the strongest economies in the world has embraced it. A lot of the other countries have embraced it. India has allowed it. And so now you're buying in at a much less risky time. Bitcoin as an asset class is now like $2 trillion. There's no asset that in history that has hit 2 trillion and then not survived. So something doesn't get to this point if there wasn't a lot of merit behind it. So that's why it's at least taking that first step and studying it. The other thing I will say is people put price targets and say 50,000 is too expensive, 100,000 is too cheap, 100,000 is too expensive. But in my opinion, all of that is really hard to, like, how do you know if 200,000 is cheap or 100,000 is cheap? I think what's much more impactful is looking at the market cap of these goods, right? You can look at like Dogecoin and say, oh, it's 19 cents. Like, what does that mean though? Look at the market cap of an asset, and that's how you know how big is it, right? So Bitcoin's market cap is a little less than 2 trillion. You look at the market cap of gold or real estate or bonds or cash that's sitting out there, there's about $2 quadrillion worth of wealth in the world, and Bitcoin's under 2 trillion. Think about how much of that rest of those assets that Bitcoin will eat up due to its natural stronger properties. So if there's like $950 trillion of wealth in the world or $2 quadrillion, and Bitcoin can even get to like half of that, which is still a high target, right? 450 trillion. That's like multiple hundred X from here. And so then millions of dollars per coin doesn't feel that crazy when you look at it like that. And so I think looking at market cap is a lot more impactful than looking at prices, I think, of Bitcoin.
Yeah, great answer. And Rohan, then there's been so many scams and hacks in this space, and FTX and Mt. Gox and Celsius and BlockFi. How and where do I buy Bitcoin? And yeah, there's something crazy thing which is known as custody, and you need to figure out self custody. I don't want to. It's just too much of a mental leap for me. So how do I get started? Now I'm convinced. You've convinced me. What is the framework that you would recommend that I use to get started in India?
Yeah, great question. And so, to be transparent, I'm not as fully I don't fully understand the Indian market, but from my understanding, how, at least in America, what I say is like at the very start, the most important thing is get off zero. Start stacking a little bit, even if it's $50, just to have, because the only times I started to even like look into the stock market or Bitcoin was when I had some sort of skin, and that helped me actually put in the time and effort, right? Because I want to understand what do I own. And so the most important thing, however you do it, is buy at least a little bit of Bitcoin that you're willing to lose, right? From there, there's a lot of talk about whether to buy through an exchange or a hot wallet or self custody. You're going to multi-sig wallet. There's just a lot out there, right? So one step at a time. First is I would say go on an exchange that you trust the founders of, that you have that's seem like they know what they're doing, and just buy a little bit of Bitcoin. From there, you can buy self custody. You could buy a wallet, which is a physical device. I have one here, for example. This is a BitKey wallet. So I have Bitcoin that's stored on this little device. And this basically allows it so that if the exchange gets hacked or something like that, my Bitcoin is stored with me. I'm a self-custodian of this, and I will be totally fine. And so that's happened over time. The thing is, Bitcoin has all the best properties. The only thing it hasn't done is stood the test of time, right? And that's what scares people. Oh, it's a new asset class. And that's true. And so that's why at the start there were some issues with exchanges of like Mt. Gox, which then there was lots of learnings from. FTX further established the regulation. So as these bad things happen in an industry, all that does is add more regulatory clarity, adds more rules, and makes people more cautious. And it's, I think, good in the long run, right? It's better than the exchanges all being working totally fine for 200 years. Then all of a sudden there's some big exchange hack where half the Bitcoin is now gone out of circulation, and now like people don't trust it, right? The fact that these happened early and often was good for the strength of the ecosystem, and it's only getting stronger from here. And so I would say like that's step 2, starting to figure out like, optimal custody model. But at the very least, start off with buying a little bit of Bitcoin, studying what it is, studying money and how to protect your money that you earn in your day-to-day job. And then that'll lead you down the rabbit hole of figuring out custody.
Yeah, great answer. One framework that we've used most of the times is get off zero for sure. Get off zero with whatever is most convenient to you. And if you are evaluating multiple exchanges, which will be most of the time most people would go to, then try and see if there's a Bitcoin only exchange, because that then removes the noise and then hopefully gives you some more things of why the founders are doing Bitcoin only. And that's where we come in. Getbit.in is a Bitcoin only exchange. We would highly recommend anyone to check us out. And being Bitcoin only removes the noise, and then explore custody as you get further down the journey. Education is the key. Understanding is the key. But don't wait for being educated to get started. Get off zero, simultaneously get educated. If you don't follow that education and curiosity, and you don't become more aware, as you rightly said, either you'll panic sell, when it is down, or euphoria sell when it is up. Both ways, and you won't hold, or you won't hodl. And the only way on Bitcoin is long-term hodling, and just keep understanding. It's still a very young technology. There's so many more facets to it, and it does beautiful things to you as you explore it down. Um, Great, Rohan. Any other advice, thoughts that come to your mind that you would like to share, and where can people find you if they want to get in touch with you?
Yeah, I think it's awesome. You guys are a Bitcoin only exchange, one of the first in India, and it just shows your like focus and not getting like distracted with other things that are not part of your mission. And so that's really cool. People can find me on Twitter at Rohan Hirani underscore or on X. And the last thing I would say is like, if there's one thing you take away from this is just remember that crypto, there is a lot of cool technology being developed in that space to help with smart contracts and help basically with real world assets and bringing things on chain. I'm not disregarding all of that, but it's a different category of innovation compared to what Bitcoin's innovating on. Bitcoin is innovating on money. Other crypto are innovating on technology, right? And so there's nothing wrong with that, but just remember to stay focused when trying to invest for the long-term future. You want to invest in money and make sure that you're understanding what you're buying into, whatever that be. So that's what I would say. And thanks for having me on.
Yeah, before we close, what do your friends talk about you, and what was your family okay with understanding Bitcoin and you understanding Bitcoin and exploring this journey, or was there any resistance, or any stories that you would want to share with our audience?
Yeah, I mean, to be honest, at the start, it's always like, it starts off with jokes of like, haha, the Bitcoin guy. Then it goes to just not really caring. They say, oh, okay, Bitcoin's cool, but like, I don't really care. Then it's like the questions, right? Of like, hey, like, what do you think about Bitcoin or Ethereum, or where should I start to buy some Bitcoin if I buy some? And then I'll get those texts like, hey, I just got my year-end bonus and I put like 10% of that into Bitcoin. And so I'm like, they're starting small. And now so many of like a lot of my smart friends are starting to get it. You know, and the reason that they weren't into it before is because all the experts said no, right? These people that they admire opinions of, like Charlie Munger, Warren Buffett, Jamie Dimon, these are all smart people who have navigated the times of their generations very well.
Yeah.
But it's new times. These are unprecedented times, like at least in America, 120% debt to GDP. Like they didn't live through this. And so it takes, to your point, first principles thinking and starting from ground up and just knowing that things can happen. Not everything is going to be the same as it always was. And so I'm seeing now a lot more like of my smartest friends who are like taking it very seriously now and just treating it like almost like a savings account to some extent, which is very impressive. Or it's cool to see this kind of change over time. And so the nature of it is that this is not going away. And either you look into it and study it now, or you study it in 15 years. It's in your better interest to study it much earlier than later. And so that's what I would say.
And what about your family? Have your parents ever thought about saying, Rohan, don't waste your time, do the regular stuff, you're earning good money, put it in, increase your allocation to 401k rather than playing with this internet money?
Yeah. At first, they didn't understand it either. And we're kind of like, when they were starting to find out how much I was putting in, there was definitely a lot more concern, as naturally as parents would have. But over time, they started to kind of get it, and they're like, okay, this makes sense. And of course, I'm not saying put 100% of everything. The nature of it is that it could drop 50, 60% in a year, and that's okay. And that'll happen, and I'm okay with that because the earlier you get in, eventually, once you start to 2x or 3x, you're playing with house money at that point, right?
Yeah.
And so the earlier you get on it and have a long-term time horizon, and if you're thinking about it for investing for your future kids and their education and your retirement, like I think that's the best way to think about it, rather than like, oh, I'm going to buy a nice watch next year because of I bought Bitcoin today. That's the more of the like crypto mindset of like short-term wins, very, very high peaks and drops. And so that's not this game.
Yeah, the Lambo mindset, as they say.
Yeah.
Great, great chatting up with you, Rohan. And thank you for sharing your time with us
Of
and
course.
your very valuable experience and advice.
Thank you for having me. I love what you're doing, and good luck with everything.